Good evening, everybody. I'm Pierre Roberge, the Daily Trader. It is December 20th, and we are going to take a look at Tesla stock from a technical analysis perspective. My goal in doing these videos is to help you understand how you can use technical analysis to make better trading and investing decisions. But I'm not a financial advisor, so please do your own research and make your own decisions. So what's happening with Tesla? Tesla is dropping. Tesla is down $12.07. That's 8.05%. Closed at 137.80. Post-market, we are down by an additional 25 cents. So let's look at this debacle. I think we can call it that. The stock market is rebounding a little bit in terms of indices, but Tesla is not. Yes, the stock is getting cheaper and cheaper and cheaper, but we are still in a downtrend, and I'm advising you not to buy a stock that is falling because it will continue to fall until it stops. And it stops when it stays in the congestion zone for a while, but then it can continue to go down further. So the real time we can know that the stock has started falling is when it starts to go back up. How do we know that? We need to break a diagonal downward resistance. We need to break a horizontal resistance, and we need to have a stochastic over 60. This is what tells us that we are recovering. But we have not had that since September. So since September, we did not get a technical analysis signal to buy this. Was that a good call? Yes, it was a good call because at that point, the stock was at 240 and now it's at 130. Some people buy because it's a discount, and they have been buying that discount since $400. So I'm not sure we can call it a discount. I think the discount would be when Tesla comes back up and starts an uptrend again. So that's a real discount. This is a fake discount. This is like the first negotiation you have with the used car dealer. The car is at $15,000 and you tell the guy, could you make me a deal? And he's giving you $500 and then you buy it. If you buy it at that time, you got a discount. But if you negotiate with that person for 1 hour and then threaten to leave and give him an offer that you want to pay, I want to pay $12,000, I give you 10 seconds and I walk out. This is a much better way to negotiate. So here, the stock market is the same thing. The stock market is coming down a little bit. You could dollar cost average. Yeah, you could dollar cost average, or you can watch the trends. And when it's in a downtrend, you don't against yourself. You don't negotiate over yourself. You just let it go down, and then you swoop. Anyway, let's look at this a little bit closer. So we are back into our downward channel, this big downward channel that started September. At the end of September, we are back into it. So this is a resistance again. We came outside of it with a little bit of a push, but we did not have stochastic over 60. And what do I always say? If you see a move up without stochastic, it's not a change in trend. The trend continues. And this was right here. This was right also here. We had a move up. We broke it. We broke the downward channel. Stochastic was not there. It was not to be believed. And guess what? It continued falling. So the tools are here. The tools are here in front of you. The resistance line is there. Stochastic is there. Every single day I do a video. You just have to watch. I cannot do more for you. So let's go look at the 1 hour chart. We opened lower, then we maintained ourselves not too bad. We have a long wick at the top and almost as long wick at the bottom. And then we went sideways and then we started cratering. Second hour down. Then we tiptoed a little bit. Then last hour down. In terms of indicators, stochastic at 0.64, it's almost funny. And even on the 5-minute chart, stick is at 3. On the daily chart, stochastic is at 0.23. We need stochastic at 60 within the time frame we are looking at to consider this a bullish trend. And then we need to take a look at any resistance that are very close to confirm that. We are so far from that right now. We are so far from that right now. We are in a bear trend. And what did I tell you about this RSI thing? Yes, it's overbought. It's overbought. Yes, it can be overbought and still continue to go down. This is crazy. This is crazy. This is a great company, but the stock market is a different beast. The stock market is not an accountant. An accountant would look at the numbers. Yeah, sales, cost. Yeah, this is a buy. The stock is worth this. The stock market is not like this. The stock market is so much more volatile than that. It's looking at the economy. It's looking at the political thing. It's looking at Elon buying out Twitter. It's looking at a bunch of things. So the only way we can make sense of the stock market is by looking at the trends that the stock chart is showing us. Thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. Click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow and I'm going to tell you à la prochaine.